Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden treasures within corporate filings and try not to get lost in the footnotes. Today we're diving into a recent report from United Parks and Resorts Incorporated, and let's just say Teresa little something about their CEO's paycheck that caught our eye. Make sure you hit that subscribe button and join our Discord community linked in the description below. It's where the real corporate conversation happens. So, what's the big news from United Parks and Resorts Incorporated? Well, it looks like their Chief Executive Officer, Marc Swanson, is getting a significant boost in his compensation package in the form of restricted stock units, or RSUs. This isn't just a small bonus, this is a strategic move to keep their top leader motivated and aligned with the company's long-term goals. This is how the report officially states the Compensation Committee of the Board of Directors made the decision. On the 15th of December 2025, this committee, which is basically a group of directors responsible for executive pay, decided to grant a bunch of restricted stock units to Marc Swanson, the CEO. Now, these are not just any stocks. They are units that will become actual company stock over time, but only if certain conditions are met. This is a way to tie his earnings directly to how well the company does. The total value of these restricted stock units at the time they were granted was a whopping $4 million. To put that in simpler terms, if the stock price stays the same, this is about how much those shares are worth right now. This is a substantial amount and shows a big commitment from the company to reward their CEO. The RSUs are set to vest, which means become fully his at different times over several years. We're talking about portions vesting at the end of 2025, then spreading out through 2026, 2027, 2028, and finally in 2029. This is great for retention, meaning they want him to stick around for a good while. It also means his earnings from these specific grants will be spread out, which is pretty standard practice. But here's the kicker. These RSUs only fully vest if Mr. Swanson is still the Chief Executive Officer of the company on those vesting dates. Now, let's look at the breakdown of those vesting schedules because the numbers tell a story here. First up, $500,000 worth of these RSUs will vest by the end of this year, December 2025. That's a quick payout, which can be a nice immediate reward. Then, $250,000 worth will be his by mid-2026. Another $250,000 will follow by the end of 2026. Now, we see a bigger chunk, a full $1 million vesting at the end of 2027. This is a significant amount and signals a longer-term commitment. And another $1 million will be his by the end of 2028. Finally, the last $1 million will vest at the end of 2029. This extended vesting period, especially with large amounts in the later years, is a clear signal that the company expects the CEO to be at the helm for a long time, guiding the company through potentially significant growth phases. It's designed to keep him invested in the company's long-term success. This is all happening under the company's 2025 Omnibus Incentive Plan, which is basically the overarching plan that allows for these kinds of stock awards. This is the company we are talking about, United Parks and Resorts Incorporated. They are the ones who operate theme parks and attractions, aiming to provide entertainment and experiences for families. And finally, this report is signed off by G. Anthony Taylor, also known as Tony Taylor. He holds a pretty important position as the Chief Legal Officer, General Counsel, and Corporate Secretary. This signature basically means the company is formally submitting this information to the US Securities and Exchange Commission. Now, let's take a step back and look at what this means. Issuing such a large RSU grant to the CEO typically signals confidence from the board in both the CEO's leadership and the company's future prospects. The staggered vesting schedule is a common and effective tool for retaining top talent, ensuring the CEO remains focused on long-term value creation rather than short-term gains. It aligns the CEO's financial interests directly with the shareholders. If the company's stock price goes up, the value of these RSUs increases, benefiting both Mr. Swanson and the shareholders. Conversely, if the company falters and the stock price drops, the value of his award diminishes, giving him a direct incentive to steer the ship wisely. We did not find any extensive financial tables in this particular filing snippet that we could analyze for this report, but typically these kinds of executive compensation disclosures are part of larger filings that do include financial performance. If this were a more comprehensive filing, we'd be looking at revenue growth, profitability, debt levels, and how these executive compensation packages compare to the company's overall financial health and performance against its peers. A truly robust analysis would involve comparing these compensation figures to how the company has performed in terms of earnings, per share, stock price appreciation, and whether the value of these awards is truly commensurate with the value created for shareholders. However, based on this specific filing, the focus is clearly on executive compensation. The significant value of the RSUs suggests a strong belief in the current leadership and a long-term strategy for growth. The key risk, as always with such a structure, lies in whether the company's performance will indeed justify the investment in its CEO, if the company struggles to meet its long-term goals. These awards, while substantial now, could represent a significant payout for leadership that hasn't delivered the expected results. This is the inherent gamble in long-term incentive plans. In conclusion, United Parks and Resorts Incorporated is making a substantial investment in its CEO, Marc Swanson. Through a large restricted stock unit grant with long-term vesting periods, this signals confidence from the board in his leadership and the company's future, aiming to align his interests with long-term shareholder value. The success of this strategy will ultimately depend on the company's ability to deliver on its growth objectives. What's your take on this big RSU grant for the CEO? Do you think it's a smart move or a bit too much? Let us know in the comments below if you found this deep dive useful. Please give this video a thumbs up and subscribe for more corporate insights. And don't forget to join our Discord community. The link is in the description. Thanks for watching, and we'll see you in the next decode.